in regards to your question on the lifestyle investor commandments, so I'll just start real simple with the first one. It's lifestyle first. And I want people to figure out what the ideal lifestyle is for them. Uh, to me, it's being able to live a life where you own your time and you can choose who to spend it with and how long you want to spend it. And it's not to have no work. It's to be able to choose to do the work that you love on your timetable completely. And so I help people in this section of the book. I walk them through their freedom vision, and I help them kind of create what is important to them in terms of impact, like impact of relationship, impact of time, impact, so it's like all these, time freedom, relationship freedom, purpose. These are the things that I want to help people figure out. But I don't want to invest in a way that's going to cost me more time. I want to invest in a way that is going to leverage my time. It's going to get me a return with less time or eventually with no time. So that one is a really interesting and easy one. But to me, like, that's what it's all about. I'm not investing for investment's sake. I'm investing to create the lifestyle that I desire, a life that is on purpose, and not as a reaction to whatever is going on. Like, it's by design, it's by intentionality, sitting down and mapping out what I want it to look like with my family, not just, responding and reacting and putting out fires and solving problems.
And that I think that's the challenge with most people is they're kind of floating through life versus creating a life. And I think that that all happens, January 1st. And again, any day could be January 1st, but it's January 1st for me where I can map out my entire year and know exactly what I'm trying to create, exactly what I'm trying to accomplish. Where most people, they just kind of float around life and they have no idea what tomorrow is going to bring. And, and they walk around saying cute things like just follow your passion and, shit like that. And then they wake up 10 years from now and they go, well, hey, I got nothing accomplished because I was just following this thing that didn't give me any freedom, just gave me a lot of heartache, just gave me a lot of being uncertain. And I think that brings a lot of stress to a lot of people. What's one of the commandments that you could say that maybe is not as mainstream as most people would think?
Yeah, so there are several. So where I think that I differentiate from most investors is that the majority of my commandments are probably not mainstream, or they're things that people maybe don't even know are possible. So one of them, for example, commandment number 3 is finding invisible deals. And that one to me is like a huge game changer, to find deals that are off market or deals that aren't even for sale. But you negotiate it, because you know the right person, you have the right connections, or you're part of a group, and this group curates deals. I do this with my mastermind and with my private clients, and we do all kinds of deals. And then it's also paying attention to the trends. Like, are you just looking at what is good today, or are you trying to predict and project what's going to happen, 5 years from now, 10 years from now? Like, what are the hot markets? What are the disruptors and transformers of industries? What can software do that totally is a game changer for something that today is the status quo but isn't going to be, or something needs to be improved, or shifting from retail to e-commerce, or cannabis, or music royalties, or, I mean, there's just so many hot markets that are out there that exist, cryptocurrencies, blockchain. There's just so much innovation. And if you're paying attention to the trends, you can be on the cutting edge of some things before people get in as an early adopter. And there's just a ton of opportunity there. So
And
I
so,
think,
so I'm going to stop you right there real quick because somebody asked me. I do a Wealth on the Beach club training and coaching every single week, every Wednesday morning, 9 a.m. Pacific Standard Time, and somebody asked me about that this morning on the our live Q&A that we do every week, and they asked me about cryptocurrency. What's your thoughts about that? And do you have what percentage of your portfolio is in crypto right now?
so I think that cryptocurrency in general is a mixed bag. You've got alternative coins or altcoins that They might make it, they might not make it. I mean, you'll probably have more that don't make it than that do make it, but the ones that make it are going to be game changers because it's an innovation that's needed. I think Bitcoin itself is a great investment or a great hedge. I don't even want to call it an investment. If it ends up being an investment, great. I would look at it as a hedge to a devaluing dollar that is devaluing every day as they're printing more and more money. And it's just a lot more convenient than gold, and there's more utility in it than gold. So to me, I wouldn't look at it as like you put all your chips in it. I just think, what if you put 0.5% to 5% of your portfolio into it, depending on your risk tolerance and level of understanding and comfortability? You're probably not going to, like, let's just say 1% of your portfolio. If it goes to zero, you're probably going to be all right. You're not even going to notice it. But if it goes to double where it is, that's a significant play to, if it goes to 10x or 100x. So those are, I really like to invest in a way where I'm not exposed to too much risk, but the return is really big. So yeah, I think that that's a good opportunity. And I think that today we have this archaic banking system that hasn't innovated in the longest time. Like, you have to go to a bank physically to do stuff, like, or you can't send a wire on the weekends. What? Like, because it's a Saturday, it's 3 a.m. on a Saturday and you have no way to transact money, but you can with other mediums. So to me, it's the innovation that we're needing, because we should be able to have some form of commerce or exchange that happens 24/7.
And it's not stopping. I mean, the innovation, the technology, if you don't wrap your head around this stuff, guys, I mean, honestly, you're going to get left behind. I tell the people that I coach all the time that, look, you're going to be a dinosaur. And it's not going to be in like 10 years. It's going to be, you're going to be a dinosaur in 3 years. I mean, this is happening very, very quickly. They say that the technology in a computer, every 3 months, it's like doubling. I mean, the rate of innovation and technology is astounding, and we have to be on the cutting edge if we're going to stay relevant as leaders, as business people, and as investors. What's another commandment that we might be interested in hearing about?
So this one is one that most people come to me and say, wow, I never considered this. And that is my fourth commandment. So that one is to get your principal back quickly. And so the way I invest, I like to invest in shorter term investments that I can get my money back in a year, 2 years, maybe even 6 months, and negotiate some sort of equity so I still have upside. So I get my money back, I have upside, so all my risk is gone, but I still can make an exponential return. But I can take those same dollars and recycle them into another investment. So ultimately, what can happen? Let's say I do a 1 year deal. Let's say it's a real estate deal, and I'm able to have refi out of that property in 1 year. It could be a syndication. It could be it could be your own deal, but in 1 year, you get all your money back. Well, now you have equity, and you take that same, let's call it $100,000, and you invest it in a debt deal. It's a 1 year note, and you negotiate an equity kicker in that deal. So you have equity for free. You get all your money back plus the interest over the course of the year. You have cash flow, which is my commandment 5, always get cash flow, immediate cash flow. And so you're cash flowing this thing while you're basically growing an equity position, and then you're getting that money back again, and you can invest in another deal. And so let's say I take that same $100,000 back on that note, and then in year 3, I invested in a 1 year deal in an operating company like I just did. But I set up an accelerated distribution schedule where 80% of the returns come back to me until I'm fully paid back. Then it reverts to whatever the equity split is. So, I just bought a dog training company out of Kansas City called KC Dogs. And I don't know anything about dogs. I don't own a dog. I just noticed a lot of people are buying dogs. And so they're going to need to train them. And I figured this would be a great business to buy. And coincidentally, Patrick Mahomes also thought that this was a good idea and trained his dog at our business. So that was really cool. But that I have all my money out of that deal. I put, it was what, $130,000 down. But I got $130,000 in less than 6 months back. And so all my risk is out of the deal, but I have equity. And now I can take that same money and do it a fourth time and a fifth time and so on and so forth. So that one, most people will invest in the stock market long term, or they'll do this risky equity investment in a company that probably isn't going to make it, or they'll do it in a venture fund that's a 10-year hold, or they'll do it in a real estate or land deal that doesn't even cash flow. And they don't know if they make money for 10 years. And hopefully they do make money, but there's just no utility. I want utility of those funds, and I want to be able to compound my returns.
Wow, good stuff, man. This is very, very interesting. I could probably keep you here all day, but we just really appreciate your wisdom and your knowledge today, Justin. This is highly valuable. There's no question about it. Thank you for watching our short clips on Alonzo Academy. If you'd like to watch the next short clip, click here. If you'd like to watch the entire podcast, click here.